All right, as we all know, second week back into earnings is always the financials week. And we're going to be talking about these companies today, seeing how we're doing, and get some ideas for a couple of these stocks that I'll be highlighting. Needless to say, I'm not actually highlighting any of the financials because, well, it's an interesting place to put your money in right now for sure. So, a lot of financials this week, but there's some other companies too to talk about. We start off Monday here with PepsiCo, or as you might know, Pepsi. They also own, Frito-Lay. So they're in pretty much all the consumable categories. There you go. It's PepsiCo. So for them, they're anticipating, I believe it's $1.25 in terms of EPS, which is a decrease year over year. And again, that's not an unexpected by any means. If you talk about really just the current environment, all the safety protocols they have to go through, it's not unexpected to see an EPS decline. So I think I'm completely with that. I think that 125 numbers actually makes pretty good sense. Sales decline is expected to be around 6.7% though, which from my perspective, I don't necessarily know if I see that big of a decline year over year. And I think there's potential for it, I will say. Working in retail, I can tell you right now, Pepsi's had trouble shipping out product to retailers. I know for a fact that they have. So there are some times where we'll go without having Pepsi products because they haven't been able to ship it out. And I don't know if it's because of lack of drivers, shut down facilities. It could be a mixture of all of it. So that sales decline I could see possible, but I don't think it's because of lack of demand. I think it's entirely likely just because of the fact that they weren't able to produce as much as they needed to. We also had an aluminum shortage, so they weren't able to produce cans. They were using a lot of, bottles instead, and sometimes people prefer buying cans, enjoy the taste better out of a can, I guess, even though you can't, seal it back up. But, hey, there's a gadget for that, okay? So, I think that I'm seeing more of like a 5% decline maybe in sales, so I think they'll beat on a sales perspective or revenue perspective, so EPS probably pretty flat. Tuesday we get into some big financials with JP Morgan Chase, Wells Fargo, Delta, Citi, First Republic Bank. I mean, a lot of financials here already Tuesday, and with all of these I think there's a big thing to consider. The economic decline, I think you're going to see continue for a little bit just due to the fact that we may see another wave of closures again. So all these companies are going to be, first off, struggling. I will say that. These are companies that have been raising capital big time, and they've had to, really, because, there's loan forgiveness. There's not really a good path for them to make a lot of money right now. They still obviously have a lot of assets under management, but it's just hard for them to make more money right now. So I expect to see not necessarily great times for these financials, because you talk about places foreclosing or people foreclosing because of bad economic times. Financials, they're at weak points. I don't think these stocks are going that much lower, but I do think they can go lower. I think we may have overestimated how quickly this economy was recovering, and therefore bank stocks went up a little bit too much, but they're still down pretty good for the year, but I could see another downward movement as we see cases increasing. But on the bright side, it's typically, at this point, younger people that are these cases because they're testing younger people, and the risk of death is quite low for them. So we may not see with, deaths at all-time lows, we may not see an actual reclosure again. So I don't know how that looks, but again, I just don't know where the joy is for these financials right now. The stocks aren't that exciting. They can't raise dividends, no buybacks. So I don't know. Not an area I'm too interested in at this point. So I hold some Bank of America, which we'll see later, but I don't plan on adding that much more at the moment because I think they'll be trading stagnant for a while. With that, we also have Fastenal, Wipro, and Indonesia Energy. After close Tuesday, you've got Kura, Kura, I should say, which is a sushi bar. And again, this is definitely one that you're going to see a bad quarter from due to the fact that, well, what a shocker. This thing would have been shut down for quite a while. Especially you think about a revolving sushi bar. It's a business model that can't exist right now in the current environment. It just can't. This is food that passes by people, within, inches of it. Within inches. Give her inches, feed her well, as the song always said. So definitely don't expect a good quarter out of this. I'll be looking at it because I want to see how bad it could get, but I don't know if they can even do business right now. It's something I'd like to have to look at, but this is a business model that's completely wiped out just with the current environment. Before open on Wednesday, we have United Health Group. Definitely one I'm pretty interested in looking at because you think about just the entire healthcare environment. It's kind of interesting to look at. There are a lot of hospitals that have completely just disavowed seeing patients in hospital, right? They've dedicated themselves to really corona relief, and you know what? That's not necessarily good for a lot of the people that need to see that. So they've been moving to a lot of digital services. So I don't know how that affects the United Healthcare in terms of that. Obviously, people are still insured. There's no doubt about that. But as far as in-network, out-of-network, I don't know necessarily if that means there's going to be, more money going their way, whatever it might be. We would like to see, but for my expectations, I anticipate a relatively normal quarter. It's not like people aren't using their health insurance now. They still kind of are for prescriptions, and probably more than ever for prescriptions, just to be honest with you. But still, that's a industry that never goes away, People are always going to be buying their prescription meds, using their insurance for it. So after them, we have Goldman, Eat My Sacks, PNC Bank, obviously, U.S. Bancorp, BNY Mellon, all of these financials again. Goldman Sachs, definitely probably one of my favorites of the bunch, besides, JP Morgan Chase. But again, I just don't anticipate good quarters out of these guys at all. They're all expected declines year over year, so not unexpected, but just I don't see much coming out of them, in my opinion. And you shouldn't get your hopes up. I think these are going to be stagnant stocks for a little while. Definitely going to be stagnant stocks. It's all about how their investments are going that I guess really matters as far as money making, because obviously loans, not a good money making prospect right now with a lot of foreclosures going on, and who knows? Besides the financials, we have ASML, Infosys, and Progressive, another insurance company. So, insurance-wise, did you bundle your home and auto? I don't know. I don't. Flow tells me to, but obviously people are still going to be going through insurance. It's not a change in environment in terms of that. So, just a lot more deals over the phone and on the internet. So, but overall, I think Progressive, just normal business for them, business as usual. After close, we've got Alcoa and Sleep Number. Now, I will say one insight for Sleep Number, which likely is maybe helpful to people. I think Sleep Number does really sit to benefit from everything going on right now for many reasons. So I can tell you again, retail experience, we have increased sales of mattresses quite a bit, really since the pandemic started, and a lot of it is because people know that they're spending a lot more time at home, and guess what? If you're spending more time at home, you're probably sleeping more, and you want a more enjoyable sleeping experience. Now, Sleep Number is obviously the top tier in terms of sleeping experience. Now, this is more really geared towards, I would say, more geared towards couples, because obviously the ability to do a Sleep Number on both sides of the mattress, but definitely geared towards anyone who really just wants a nice sleeping experience. Sleep Number makes a mean mattress, and you usually pay for the price. Now, again, with that price comes some concern, because you think about recession-type environments. Are people investing in that? Well, from my experience, I do think people would be investing in something like a mattress, because a mattress is something that you should be investing money into, right? Because it's where you're going to be spending a good majority of your life is on this mattress, right? Right around 7 to 8 hours a day. you're going to be spending on this mattress. So you want it to be a good experience. And Sleep Number, they make a mean experience. So I expect good sales increases coming out of sales or Sleep Number. EPS, I can't give you an estimate on that because I don't know. Again, with increased health concerns, I bet EPS is down, but revenue should be looking good for this company. If it isn't, I could be wrong, but I'm expecting good numbers. Thursday, we've got Domino's. Again, I think they'll be fitting in with the other fast food chains. I do think you'll see a sales decline of around 5% to 10% year over year, just because people, they've been eating out more, but it just, you don't see as much. They lose the in-store portion of it. They lose the in-store portion of that sales. They really do, because the insides have been closed. And some people do go inside to order pizzas, and they're not going to do it online or over the phone. So they're going to lose that portion. You saw it with McDonald's, Burger King, and the like. So behind them, we have Bank of America. Again, we talk about foreclosures. Don't expect too much out of Bank of America. We've got Morgan Stanley and Charles Schwab. One note on Charles Schwab is, if we're talking about financials here, I do think you're going to see an increase in terms of assets under management for these investment companies, really due to the fact that a lot of people are getting involved in the market. You see a lot of new accounts, and I have friends that work at TD Ameritrade that have mentioned in the first quarter of this year they saw new accounts increase by record numbers. People are really interested in getting in the market, especially when you saw such a big dip. People are very much interested in getting in the market, and we really haven't seen another sell-off since, so assets under management should be up pretty big. Now, if that's what you want to look at, good for them. EPS not going to be looking good because, again, we talk about the fact that we got rid of commission fees for Charles Schwab. EPS likely takes a hit, and revenue likely takes a hit. But overall, you're going to see good numbers coming from or Charles Schwab, I should say. Sorry. But besides them, you have Johnson & Johnson. It was one I wanted to highlight. This is a company actually expected to naturally decrease EPS year over year by around 20%. Not unexpected. But what does surprise me is they're expected to decline revenue by around 5%. From my perspective, I don't think that's going to be true at all. I think Johnson & Johnson should absolutely be increasing revenue year over year by a decent chunk. It's definitely going to be low single digits at a minimum, in my opinion, because this is a company that's very well poised just for the current environment. People are buying their products at, really steady levels. They usually are anyways, but these are products like your soaps that, guess what? You're going to be selling a lot more of, especially hand soaps. My gosh, people are all over hand soaps right now. So I think Johnson & Johnson should actually see a sales increase year over year, and I could be wrong on that perspective, but I think it'll be low single digits. Just from my experience of seeing the product sell, I've seen an increase in demand. So washing your hand is always going to be massive, and washing your hands is going to continue to be massive even after we're kind of through with this. So Johnson & Johnson should be fine. Abbott Laboratories, I expect consistency here. They're going to be consistently good. Abbott Laboratories know what they're doing. They're not like on the breaking front of anything regarding the corona, so nothing special there, but they're just going to be consistent. People are always going to be getting the meds they need, regardless of pandemic or not, because they need the meds. We have TSMC, Sonoco, Truist, and AngioDynamics. No real insights on those guys, but after close we have Netflix. Did want to highlight this one because there's a lot expected out of Netflix. They're expected to grow their EPS around 200% year over year. Are you kidding me? That is massive. They're expected a little bit under $2 in terms of EPS, which would be incredible for a company like Netflix. Their turnaround on this company has been massive in the last 2 years, from a very unprofitable company to making profit. So I'm pretty excited with their management, what they've been able to do. Now, stock valuation is still a concern. There's no doubt about it. But they are expected to grow revenue around 20% this quarter as well, which is somewhat disappointing in my perspective. I slightly anticipated higher numbers than 20% because it's really poised for growth. this is an environment in which this would be their lockdown quarter, in which you would kind of expect with people with nothing to do, they should be growing subscriptions by a good number. Now, if they happen to post a decline in any segment of the world, I would find a concern in that if you're Netflix, because this is the quarter in which they should be absolutely taking off. They should see massive, massive growth. And I'd like to look at those new sign-in number too whenever they get that. So it could be very big, and I expect it to be big. And I expect closer to over 25% revenue growth from them. And if they don't hit that, I'll be kind of shocked. So nothing really crazy as far as Netflix is concerned, but I do expect better numbers than what they're giving me. You see JB Hunt, PPG, Martin Transport, FNB Corporation, and Western Alliance. Nothing massive there. We do have some financials on Friday with BlackRock, Ally, Citizens, and Regions, and State Street, I should say, as well. First Horizon. A lot of these freaking financials. And these ones are more of the specific bank when you're talking about loans and really loan forbearance. This is an interesting company to look at as far as mortgages are concerned, with people foreclosing on their houses. These are the little guys that are going to be getting hurt probably worse than most. So definitely be looking at these. I'm not invested in any of these. I say smaller banks. They're still regionals, but they're smaller compared to the big of the bigs. They're not the big five. So not the big five in terms of accounting firms. So, let's leave them alone. But besides them, we have Ericsson, Autoliv. We've got Sensient as well. So no insights really on those. But that's your week in earnings. So a pretty big week. And again, these financials are going to carry the market. But a company like Netflix is likely going to carry the NASDAQ this week. So that's what's going to be waiting on. But the other indices probably going to be weighted down by these financials and their bad quarters. But we could see a good quarter out of each of them, but I just don't anticipate much coming out of them. So hope you enjoyed.